Hey Tobias, can you see and hear me? Is it any better? I found a possible couple conflicts where the audio was on twice. Let me know if you can hear me. Folks, I don't get it. I've looked at everything. It's the same setup I use for my audio every night for videos, the same thing I've used for weeks, and I have no idea why this volume is so low. I unplugged the webcam. I took everything out except for this thing. Have no idea. Yeah, I've checked the mic settings. I've done all that stuff. You know, I'd like to think I'm not an idiot, but I'm sure feeling like it. Let me try. Let me know if anything gets better. Yeah, I'm gonna. This thing starts working, everybody's gonna be deaf. You're traveling at your own risk right now. Yeah, that's a good idea. I need to get the crystal ball out. Closed captioning. That might work, right? Yeah, there's only mic that it could be is on my camera, but what it means, I think last time what happened is maybe that mic was picking up and we were getting the primary mic. The primary mic will not work right now. My meter's showing it's tagging. In fact, I'm getting great signal from the microphone, but nothing's happening. Man, this is very disappointing. I have a lot of really cool stuff to talk about. Market's going crazy. We're at 44 handles. Absolutely nuts here. We're actually up 120 handles from yesterday. All right, I'm gonna go. You guys are resilient, man. They keep coming back. Yeah, thank you for that. I looked at. This is like, I don't get it. I don't get it. Yeah, you know what? I do have a headset with a mic. Let's see if we can. Let's see if I can find this. How about that? Let's see if I can switch over. Let me add this in, see if I can get it. Testing. How about now? Are we getting volume now? Aha. Okay. So I'll have to wear a headset today. All right. Let's get some stuff out of here. Wow. 125 of you showed up. Yeah, there's something going on with this mic setup here. Not sure exactly. but this is working. Welcome, everyone. Thanks for putting up with a half hour of bullshit. I really appreciate it. Couple things that I'm going to try to get my head in the game because I've been focused on this stupid technology issue. I don't know what's going on with the with this thing, but let's move forward, huh? Couple things that you know, this market is just absolutely crazy. In last night's video, I was talking about the, you know, will the reversal hold? Well, it looks like we got our answer. And actually, I'll go through the details here in a few minutes on the charts, but we actually traded down to that trigger point, which was 38.59. That was exactly the low today. That thing bounced off of there, reversed, and went straight up. So overnight action was, you know, who knows? You know, it comes down to probably, right, another vaccine rally. J&J gets approved for emergency. I read some of the side effects, and it's interesting. I don't want to talk about the thing because YouTube doesn't like you talking about the thing, the poke, right? Anyway, so we'll keep it clean. But anyway, this is probably what's triggered this thing, and the algorithms are running the show right now. We're definitely seeing a lot of that activity. So, you know, that's what's going on. And so, yeah, so, you know, whether I'm going to show, we're going to do a couple things today, and I'm sorry again for the delay, and I promise you still we'll go on to the, you know, I will move on and do another, I'll give you back the half hour that I promised you guys by the screwing up. So we'll do some, after the market closes, we'll spend another half hour to just disrupt my in and out. So I'll just get the in and out a half hour later, okay? Yeah, well, I know, it's exactly right. I will get fact checked. So anyway, you know, this is another vaccine rally, I think. And, you know, I think that it's interesting that yesterday we printed down to 38.05. We're now looking at 39.23 on the S&P. Let me go on to the screen and just see what we can get here. And I think I'm off camera here. That's okay. You guys don't need to look at me. But the okay, I just was checking my mic, making sure on this setup, confirm that my mic still sounds good on this screen setup, okay? Airline pilot, that's pretty funny. Yeah, so you guys are hearing me okay on this as well, right? It should be, okay, cool. All right, there's a little delay in getting a response. All right, awesome. So this is actually a 1 minute S&P I have up here. Let's go to a daily, and you'll see this was the reversal pattern. We closed back over the 21 period moving average. And you know what? I'm getting into this analysis. I'm so screwed up, folks, on this thing. This is hilarious. This whole situation had thrown me off my game and what I wanted to do with you today. So we're going to go back. We're not going to look at charts for a few minutes. There's a couple things that I want to show you that I think you'll find interesting. And you know, I think no, somebody saying the PPMs lag. No, they're not lagging. You know, there actually is no new trend here. By the way, we're still sideways. I know that the emotion of the market rallying like it is actually makes you feel like it's going somewhere, but we still haven't, you know, this is not, there's no trends here. On the intermediate, there is. On the short term, we're just flat. This is chop. We'll see
we're about to get potentially get an RTX sell signal today. We'll see how it all plays out. I'll get through that here in a minute, but let's do a couple things. I'm trying to recenter myself after the frustration of the technology so that we can actually talk about some things as far as the backdrop of what's going on in the markets. You know, we got to watch Paul yesterday. Hope you guys enjoyed my analogy to the movie Speed, because that's exactly where we're at. That if they don't keep their foot on the pedal, this economy will blow up. They've got to keep pumping the money in. Markets are going to keep going higher on balance. I'm not, you know, I talked about it going down to the 40 period moving average. It went below the 40 period moving average in like 3 or 4 days. Right now we've satisfied at least that correction, and I'll go through those details. But let's talk about what Paul was saying yesterday. He talked about, you know, digital currency. I saw a comment early on when I was trying to get going before, that somebody made a comment that the Fed is ruining the dollar, and it's by design. Okay, these folks are freaked out by the activity in Bitcoin. They're freaked out about anything they don't control. I put on my Twitter account the other day is a picture of Yellen. I said, when these people are telling you that Bitcoin's dangerous and all of that, you know you're probably doing the right thing. And you know, it's one of those things where they're losing control and they know it. They're fighting for control. It's all about control, right? The whole situation that we've been through in the last year. And I've been talking a lot about this is the annual. 1 year ago this week is when the market rolled over really big. Now there's a 55-week cycle that comes in 3 weeks from now. We're still going to be on a watch for this thing to roll over. We saw our database, which I'll go through here in a few minutes. We saw that roll over substantially. You know, it's down to, I think, 37% long. It clicked down through that 42% window. But let's make no mistake, what Paul was talking about yesterday, I don't know if you folks watched any of it, but he was very careful about not saying it, connecting the dots between the monetary and the fiscal and the spending side, because he tells us all the time he's got lending powers, not spending. And so that's what they're going to do. They're going to keep lending. They're going to keep doing the things they do. They're going to create more currency. And you know, the whole MMT that I went on about last week is you're seeing it in full effect. You're seeing the emergence of MMT. And what I mean by that, you're seeing piece by piece being talked about on how they're going to do a digital currency. Because one of the big things with MMT, that the old MMT, it's not really modern monetary theory. It's actually old monetary theory. It's been tried multiple times, and now the engineers they think they can get this together. There's a guy who was interesting that I watched a video on, who's supposedly the one who they've figured out the answer. And this guy's was just going through how you can if it gets too hot, you use taxation to suck money out. It's all kinds of stuff. I mean, this is like, we are all, you know, we are living in the matrix, right? We're all subjects of whatever this machine that's out there is trying to get us to do. And meanwhile, for the moment, market's going on. If you got this thing right and you bought the dip, then congratulations. But what we're seeing here is really part of that MMT and everything else. Now I'm going to show you something that I have on the screen, and I found this going. We have a big OneDrive with all the corporate stuff from 20 years ago, right? And I found this old report, and I'm going to show this to you because I think you're gonna enjoy seeing this. So let me bring this over on the screen here. And now you Trump haters, don't freak out, okay? But on the front of this report was the 2018 outlook, had Donald Trump was the president of the United States, and this was, I want you to see my forecast, and I'm considering if you folks will actually, let me put something on screen for you. So we've got about 340. Thank you folks for coming today. Really appreciate it. If you will go here to the kendallreport.com, if you're interested, I'm going to, this is an old report I did a couple years ago, but if you sign up here, go to kendallreport.com, give us email. Anybody signed up for it knows we don't spam you and harass you or do any of that stuff, but I'm going to send out this report. So you go to kendallreport.com, give us your email. But here's interesting. I started my equity markets. I used to do this actually I miss my writing. I used to write every day, not do YouTube videos. And I miss my writing. So that's hang on one second here. Yeah, so I miss my writing, and this is what I want to show you. And I'm going to spin through it really quick, but I want to show you my forecast. This was in 2018. I want you to look at the numbers. I'm going to blow this up a little bit so it will get a little bigger on screen. But look at my targets looking out. 35.89, 46.95. And it's interesting because this kind of triggered me when I was doing this, because I saw I saw these numbers, and these are numbers that are right around key numbers that came out of real-time markets. This was 2018, and it was interesting because in the commentary, and I want you to see this because it's a confirmation of the work that I do, that I give to you folks. You know, everybody wants to say there's some troll out there like Bob Flips again or something like that. You know, I'm doing daily reports every day talking about markets, and the markets flip. I don't. You know, I'm reading what I see, but it gives me the conclusion here says it all. So if you want to see this report, most of the stuff, it's old, doesn't matter. I was talking about the Fed and deglobalization. Well, it's interesting. We went through deglobalization right back into globalization, right? What we're seeing right now. And anyway, I thought you'd like to see this, but I was intrigued that these numbers are numbers that I can show you that exist today on current analysis of the markets. And I've talked to you about the markets going to 41 to 4,600 and all this stuff. It gets fine-tuned over time, but I thought this was interesting. So, you know, yeah, anyway, there's that, okay? And like I said, the point of showing you that is to show that these longer term projections actually, if you're patient enough and wait for them, will happen. Now, think about going back to 2018. It was all about an Elliott wave formation that was there that I was able to project off of and come up with those numbers. I believe in the text. I didn't read through it very thoroughly, but I do believe that there is a step-by-step how those numbers were calculated and where they came from. I believe it's in the text. But anyway, the point is that here we are at 3,900 and on our way to, you know, 4,000, 4,600. I've said this before. I think with MMT and the things going on, you could see S&P 10,000. It's definitely going a lot higher. And that doesn't mean it's going in a straight line. I'll say that again. It doesn't mean it's going in a straight line higher, but it is definitely going higher. And one of the things that I thought was interesting out of Powell, there wasn't a lot to pick from, but I watched it last night, and it was interesting that the senators' questions, there were one side of the aisle was talking technical questions about what it was going to do to the economy. The other side of the aisle, you figure it out, was talking about equality and doing all these other things. They weren't talking, they're trying to get the Fed now to be the engineer of something else. The Fed is about money. Hate them, love them, whatever the case is. That's who they are. That's what they do. And Paul did a really good job, I think, of holding the line and not trying to get sucked in by these senators that wanted to suck him into some kind of opinion or something like that. So I think he did a good job. I'm not a huge fan of the Fed. I think they usually lag on how they're doing things, but right now there's other things going on in the marketplace that are really big. And so the last thing I'm going to do, and then we'll get into the analysis, because I'm just bringing something up. I was talking to a friend, and there's a website called the Wayback Machine, and it's kind of interesting. I'll show it to you, and then there's later on I'm going to actually introduce you to another book that I think will be interesting for you. But the Wayback Machine allows you to go back and put in a website, and you can go back. So I actually put in the website. It is. I got to reduce this just a touch. Hang on. This is the website of, and I show you this because it's something I think that a lot of folks that watch, we got about 500 people watching right now, and I was looking at the stats on the channel right now. I get 5,000 to 10,000 views every day. In a 24-hour period, it's probably about 12,000, and that's really good. This is all organic. I didn't buy you folks. You guys found me, and that's pretty cool. But what I did was I just kind of want you to get to know me a little better too. There's some things that maybe you don't know about me. I'm just trying to see if I can get any of this stuff to work. Okay, yeah. So this page here. Oops. This page here is the original platform that started WaveTech, okay? This is a website from 1999. This is our website, and at the time we had assets modeled 643 million, and this was about when we got our first $1 billion of money being modeled. And it's funny, if you want to see something really funny, this is that guy with the teeth showing. Looks like that's me 20 years ago. So anyway, a message from the president, Robert Kendall. So anyway, I thought it was kind of interesting. I hadn't looked at this for a long time. I'm going to show you one more little blip of this thing, and I think it was possibly this one here. And I think it was right when we got to our first $1 billion. And I get so many trolls and people that don't know who I am. Oh, really? You're not seeing the page? Isn't that interesting? Because of course you're not, because I'm on screen. Thanks. Let's try that again, just real quick. It won't take but a second. You can see the page I was talking about. Nice job, Bob. Anyway, so this is it. Quantitative Science Technologies. This was the company that originally started this, founded by myself and a guy named Dave Schaefer, and we were original partners. Shows that we had 643 million. Our plus just in that, I guess in that period, we had 21.39 million come in. It shows the average, our best year-to-date return, this is 1999, 149%. Best last week, up 7.84. Worst year-to-date, 671. Worst last week, 109. So we would track all the portfolios that were in our system, And like I said, we're doing that. So we're going to go forward a little bit. This is where I was taking you. So I apologize for having to do this twice. But this is one too many. Oh, what I'll show you here, this is this is me 20 years ago, message from the QST's president. And anyway, it was just kind of interesting. It's just a validation. Listen, I just want people to know that what I've been telling you in my 41 years, and if you watch the video on my channel, that what I've done, I actually really did that. I didn't make it up to sound good. And then the other thing here, I think maybe this is the page I want to go to. Yeah, what am I trying to say? Someone says. It's the ego in us. No, it's not. Listen, I get so many trolls. You guys, I know you read through this stuff, but I get people telling me I'm a phony and a fake. I'm not. So I'm just showing you this. Here we were right here on the week of October 30th, 2000. We were right at $964 million, right at $1 billion. But I just wanted you to see that, and I think the letter from the president, this is a better picture of me, but this was Bob Kendall 20 years ago. So the whole reason, what's my point? And my point is that, I want folks to know who I am. I know a lot of you guys are followers. Yeah, so don't say nonsense like crashes and pullbacks will happen without any evidence. Okay. Where's that mullet? No mullet. That's pretty funny. Yeah. So, yeah, what are you trying to say, YH? Speak up, man. Yeah, so anyway, in WaveTech, by the way, $275 billion has been running that thing. So anyway, one of these days, I just had, I'm going to come back on screen, then we're going full on analysis, but I want everyone to kind of understand this stuff that I'm doing, and the background. And I can tell you, we've got some really exciting stuff. I have a film crew here last weekend. We did like 20 hours of filming. Got a lot of stuff coming on. Working on master class. It's going to be awesome, and I can't wait to get that out there for you folks so you can have that. And it's a little ways away, not a lot, weeks, maybe a month, but there's a lot of work going on in the background along with some other stuff. And I'm really excited. It's been an honor to be have this community. So I just want you to know who I am, and that's really what this is about. I'm not bragging. It's just who I am, So, yeah. So let's talk about the Fed again while I'm back on screen here for a minute. And the Fed is made it clear they're going to continue to buy bonds, and what they're buying is mortgages. So like all of the expansion in the mortgage market and everything you see going on, the Fed ends up owning like 90% of every mortgage. Now this has been the case going back to maybe 2011 or 12. All the banks are doing, the banks aren't really lending. They are the intermediary between the real owner of all the mortgage paper, which Freddie and Fannie initiates the loans. The Fed buys the loans from Freddie and Fannie. They end up on the balance sheet, and that's how they're supporting the economy. So they are completely running the show. They are the puppet master. And so they are definitely doing this. They're buying anything they need to do to make things happen. And if you go back, you can watch some of the videos going back last year. I think in March, probably April, there were things that right after the Fed came in on March 9th and announced they were going to buy everything. it all switched around. And here in a few minutes, I'll go through the yield curve and talk about some of those things that are going on as far as the shifts in interest rates and things are going on. I saw a comment on the channel. It was somewhat of an interesting comment, but somebody was saying that America has become so friendly that everybody wants to come in. Well, if you want to see what's going on with cash flow from U.S. to foreign markets, just look at the treasuries. The treasuries are plummeting. Everybody's selling treasuries. Nobody wants to own these things. And the yields are going up because everybody's shifting out. And we'll talk about this crazy, this move in the Russell today. We'll get into all this stuff here in a few minutes. But what's happening is a number of things in the economy. You can look at lumber prices and see that there's a huge move in housing, and all of these things that are happening are really substantial because there is a complete restructuring of the economy going on right now. So folks that were in the cities, people moving to the suburbs, moving from state to state, there's a lot of new building going on. And if you were to come up in central Arizona and see what's going on up here, it's absolutely crazy. Housing prices skyrocketing, and you're seeing I know in some areas up here that there's a 20 and 30% appreciation in the last 2 years. So we're looking at 15 plus percent, and sometimes in some areas it's even more. So properties are just going berserk, and there's lots of demand, and there's nothing for sale. And you may have seen some of these reports. So the lumber situation is really unique. It's interesting. I have some notes that I want to talk just a minute about. Is some of the folks that are so I just happened to see that VJ said, appreciate Bob's bit of tired guys posting crash videos. This is what I was just going to go. The bubble guys, right? All of the bubble people, they look for the craziest ratios that you can find out there. They're comparing gold and lumber and making up scenarios, anything that supports the idea that the market's going to go down. Well, it's funny because over the months, I've so enjoyed working with the retail community. It's been really, really cool getting to know a lot of you folks. I feel like I see you guys. I see a lot of familiar names here and commenting, and I feel like I know a lot of you, and many of you have actually had the opportunity to talk to on our WaveTech training and other things like that. So the community is greatly appreciated here. I feel like we give value back and forth. I actually get a lot from this. Sometimes just it's so obvious of some of these comments that it actually triggers other thoughts. And I wish I could talk about what I figured out. I won't do it, and you guys are going to want me to do it, but I won't do it. What I figured out why there's razor wire around the Capitol in the U.S. I'll have to find a way to get that out. Sign up for that email. Maybe I'll do a private email on that. I can't, there's just things you can't do out in the world anymore and talk about. You can't tell the truth or your opinion in some cases. And I don't want to get into that. I don't want to get this channel blowing up. So I'm cool with that. Sign up, kendallreport.com. Give me your email. Guarantee you won't get spammed. We don't do that. Okay. All of this stuff that we're seeing happen in here, the expansion in lumber prices and things like that, I'll just put that while I'm talking about that on screen here. And this is the daily lumber, but let's go to monthly. This is where the story, look at this. It's vertical, right? Completely vertical. Why is it vertical? Does everybody want lumber? Yeah, because they're building houses everywhere. There's shortages. We know about the shortages in the chips. Everything, we went from not doing anything to everybody concentrating on certain things. And the thing that I think is interesting is I saw an article. I never saw that. I didn't see this one coming, right? What it was Malibu ski boats can't make enough ski boats right now. They're just, but they figured out how to do some turnarounds. They threw some Chinese shit in there and they made it work. And they're just selling more Malibu boats than anyone could. I don't know if they're public even, but I saw that story. Thanks, Derek. Appreciate it, man. You know, it's just this stuff that's going on is real. There is reset. The you know, economy's been completely reset. Our job is to figure out where the money's going, how it's going, and where it's going to keep going. When I'm talking about short term, if you look at the videos the last few days, I was talking about a little pullback. I've been telling everybody Apple and Tesla were in trouble. Tesla pulled back a little bit more. Apple still acts like crap. We'll go through that. I think Apple's got some problems. I don't know what they are, but they're going to be imagine if Apple was up $2 right now, where the markets would be. Well, you know, we'd be up 60 handles instead of 38. So the point is that all of this stuff that we're seeing in the economy is real. A lot of folks, it's being promoted, it's being paid for by the Fed and the government. I've talked about the fairy godmother, you know, Yellen, she wants to spend money, she wants to do stimulus, do big. So let's talk about this and then we'll go to analysis, okay? Is the thing that Yellen is really wanting, they want this $1.9 trillion. Now, we've already spent like $6 trillion on supporting the market. There's 10.7 million people still out of work from 1 year ago. And guess what? They're not coming back. I mentioned this in last night's video. They're not coming back because what we're really seeing here is that the jobs have been dislocated. When I talk about dislocation, it's we had a big dislocation of capital going on in February and March last year. The Fed came in and filled the gap with buying all the bonds and all the things they did. So they took all that dislocation in the economy and filled the hole. There's no way to fill the hole on these 10.7 million people because restaurants are shut down, a lot of service people, a lot of good jobs out there, not all dishwashers, right? There's a lot of good jobs. I know higher end restaurants, some of these people make $1.50 a year waiting tables at the big restaurants, right? And a lot of folks make a decent living. And for students, it's certainly, I bet there's a bunch of you that probably were waitresses, waiters, and going through college and whatever in life. You know, almost every one of my kids did that. And that's just what happens, right? That's what you do. Well, that's not available right now. So those are the jobs. We know where they are, airlines and all like I said last night in the video. So those are where that's happening. But this you know, this whole scenario, what's going on in the economy right now is a shift, and you got to pay attention to what's going on. So let's go ahead, let's go into the analysis here. I'm going to bring up the start with the S&P futures. We'll start to dig through some of that stuff. Let's go ahead and dig in. Here we go. Okay. Yeah, just real quick, somebody said, Paul said they're not coming back. They're not coming back because these guys aren't going to let these things open again. You know, anyway, we'll keep it to that. Okay, so here we are. Let me reverse out. I'm on a monthly chart. Let's go to a daily. Here's that big reversal yesterday. Let's just talk about the S&P. I started to break into this a little bit ago. But what we're really seeing here is the big reversal. I talked about this 3-4 days ago. I thought if we got through to 21, we go down to the 40. Yesterday, the 40 was 38.17. We spiked down to 05, and then we reversed. It just, boom, it was over, right? And we traded back out above the 21. Now we're seeing some uptick here on the PPMs where we're basically flat. There's no real momentum. And I was saying this a few minutes ago. This 2 days don't make a trend, and this pattern isn't a trend. Now, you'll see I'm going to go through weekly and monthly. So we're going to do full review. It gives me time to go through all this stuff. And what we'll do is we'll go through the full review here. But the daily, there's my favorite term, there's no VIG. There's no real momentum in this rally. Now, you could argue, say, what? That's not momentum going from 38.05 to 39.24 on the high. I actually talked about some of these numbers around 21, 25 are pretty big numbers. Let's go to the weekly on the futures, and then I'm going to flip over to cash here. So in the weekly, this last week, let me put something up on the screen here so we can see this. Let's put the market grid. So we look at this week so far, what we're doing, it sounds exciting, but we've traded R1 and we traded S3. So on the weekly chart, 38.05 was the low. You can see 04.75. It's right here on the screen. And we reversed off S3, and now we're trading almost R1. And it'll be interesting to see if we get follow through. I talked about this last night. If we can close higher in a session, we had to take out yesterday's high on the chart. Let me go back to the daily for a second here. We had to take out yesterday's high, which on the futures was 96. We've done that. And now we have to close higher than the close yesterday was 38.78. We'll most likely do that. So there is definitely a confirmation of the reversal bar, and typically we're likely to see the market grid stay expanded, and it's going to uptick tomorrow. So when you come in and you look at if those of you who subscribe and get the market grid, you're going to see a higher price range than what we get today. We'd have to get above 39 handle, so we'd have to trade 39, 39.75 or higher in the futures to get a futures STXL. But let's go over to the cash, because it gives a slightly different scenario. It doesn't need that much more. 29.30.02 is RTX, and the high right now 39.28.39. So it came very close to the STX number. We're trading 23 now, so we backed off it a little bit, but if we did get a close over 39.30 today on the cash on SPX, that would give us a short-term SPX sell signal. It really wouldn't mean much. All it would say, we'd hesitate for a couple of days, wouldn't indicate any kind of reversal or anything like that. Let's go to the weekly on the cash. Similar situation here. R1 is 39.29.26. So we went to 39.28.39. Basically got a perfect R1 hit. If you look at the STX weekly 38.11, we printed down to 05 yesterday. So we went just below the STX support and reversed and are higher. Now, when we look at the PPMs here, we got PPM1 at a plus 5.6. That's this orange number here. PPM2 plus 7.5 and PPM3 at 0.70. And what these numbers are, these PPMs are price pressure momentum. It gives a probability factor of the moving average holding. Now, I talked about this, probably when you folks were tired of hearing this on the video, but I said the big number is going to be that 10-week moving average. It's up at 0.65. There was only a 30% probability for it to close or penetrate that number. And We didn't do it. We went down to 25. We went through it for a second and reversed, and we're well above it, trading back toward, like I said, R1. Next number in the pattern on a weekly is 39.54 on the upside. Can we get there? I don't know. We got a couple of days. We'll see how this thing plays out. A lot of times, markets seem to blow themselves out. Like yesterday, who's going to want to buy this thing? We'll find out, what happens here. We have continuing claims coming up. We have a number of things coming out here that are going to actually maybe keep the market going. So last week, continuing claims not good. Claims not good. We had a lot of really negative numbers come out, and I've been talking about this for a while, that I think the economy is starting to slow a little bit, but right when you start to see some of those metrics come out, we've seen some positive numbers come out that were somewhat unexpected. So this is an important pattern to understand. I just want you to know that the weekly patterns are still in an uptrend with these PPMs where they are right now. These are in a positive trend, and they're not going away. I'm right after I finish the monthly, I'm going to bring up the WaveTech database. I want to talk about the database a few minutes, because that's what makes the process unique. And I was telling somebody the other day, I've been having people tell me that this process doesn't, try to confront me and say this process doesn't work and all this stuff. I'm still here, folks. 40 years. I've been running this process for over 25 years, closer to 30 years, for a very long time, right? And so for some reason, markets don't like things that don't work. They just eliminate them, whether they're companies or processes or whatever. So anyway, yeah, so easy, Sean. The market doesn't have to go up on high momentum. It can, we used to call this the creepy crawler, okay? So it just crawls up that wall worried. There's not a lot of momentum, but on a daily, there's no momentum. On the weekly, it's a very robust trend, or the intermediate trends are what drives this markets. So this is a great question, and thanks for asking it, because here's what happens, is if you have my analysis, there's a couple philosophies you need to understand. So there's three primary drivers within every trend, and that's why I have these 3 PPMs on every length of chart. So if I'm looking at a daily chart, that I'm looking at these 3 components, weekly or monthly. So there's trends within trends, and then there's short-term, intermediate, and long-term trends. Like in our software, we promote a lot of what we call multivariant trading. So we want to trade the same symbol on a short-term, intermediate, sometimes on a secular trend. We want to have that all working within a portfolio. And when you do that, it brings in some dynamics. It gives you the ability to press the markets when they're moving in a trend. Gives you the ability to protect and change the relative beta when you're actually when the trends are starting to falter a little bit. Doesn't mean they're going to go down, but you get the short-term trend slows down, maybe even goes down. We saw a 4 or 5 day retracement back. Boom, we're right back at the highs. That's how these things work. And so those ebbs and flows you can play into within a portfolio, and that's what our software is capable of doing. But the multivariant, this is why I go through daily, weekly, monthly. So weekly trends are still very robust and up 0.55, 0.74, and 0.70. Let me help you with this. Is the PPM value, anything over 0.25, positive or negative, is a trend. So negative 0.25 would be a negative trend. In this case, we have very robust trends on a intermediate basis. When I go into the monthly, they are insanely bullish, okay? So there's not even a possibility of a major collapse, a 2020 thing to happen from this position. We were in a much different position. You can see in this chart that I have on the screen right now. Let me go on the screen. This chart on the screen right now. is exactly, this was last February. These things were actually rolling over. There is some vulnerability to the position we're in now, but this is going to continue to climb this line. I talk a lot about the moving averages being demand lines. So what moving averages do, and that's why just about everything it's a great way to smooth and take noise out of the markets. And this is, so not only in my analysis am I using moving averages, but these PPMs below, PPM1 tracks the 10 period moving average, PPM2 the 21, and PPM3 the 40, and they're simple averages. I'm more interested in the underlying trends, the dynamics, the probabilities of whether that moving average will be a valid trend line. And this is what I said probably a couple of weeks ago when we traded below it. I said this is the demand line. We're going to stay right on that 10 period moving average and that upward slope. And last week's video, if you go back and look at the S&P section that I did, you'll see exactly what I was talking about. I started talking about the trajectory of these trends. So let's do that for a minute. So you can see the angle of these trends. I'm going to draw a couple things on screen here. So these angles of, here's the 10 period moving average. It's basically at this angle will continue on, and I talked a ton about this last week, but this is a classical analysis utilizing these PPMs. As you get what I call momentum comes first and then the trend. So momentum precedes price. And so these, where I'm drawing out right now, these are the spikes in momentum on the three levels that I talked about. So internally, there's a short, intermediate, long-term within trend within the weekly even. So these are just telling me that once it gets to this level, I'm going to take a couple lines off here in a minute so you can see this, but you get into what I call the maintenance mode. So the indicator goes out, goes flat. There's no divergences. None of that stuff matters. RSI is probably one of the worst indicators, my opinion, there ever has been. Okay, so this is what happens here. I wish I could just back out some of these lines, but this is the general setup. We have momentum surge, price, momentum surge, price, momentum surge, price action in a direction. So they come in, and what ultimately will happen is that there'll be an attempt at the shorter indices or the shorter PPMs to actually uptick, and then you get the failure and then maybe a correction. And let's take these lines off for a second. Just want to draw this in. So this is what I'm talking about. The momentum surges right here. All of these indicators come back into their first and second derivatives, and then they go sideways. And these are what I call trend maintenance mode. So right now we're in the longest term trend maintenance mode, and this is the weekly chart. Okay, so let's go in and let's flip this thing to a monthly chart. Then we'll be done. Now, what's interesting about the monthly for the month of February, and we just have a few days left, by the way, and this is showing that the RXT extreme 39.47, the high so far this month, 39.50. So we had an RXT almost direct hit. We went above it just by a couple ticks. If we look at the low for the month, 37.25, we never even got to an S1. We had very little downside this month. We started the month, we went up, and it continues to be month. So now we're just going to take that same analysis, and I talked about this last week, so I'll just cover it very, very quickly here, is that this angle, you see this very, very steep angle on the the 10-period moving average is vertical. Hang on, I've got to reset something. There's some things in the way I need. Okay, try this again. So this angle that's going on here in these charts is very significant. So we've got I'll draw this out, 3.0, anything over 0.25, this is like a extremely robust trend. 1.76 and 1.13, and this is telling you that the trajectory of these moving averages are going to continue like this, because this is what's going to happen, just what I just showed you on a weekly. But what's interesting about this, and this is a very unique pattern, it's actually an extremely bullish pattern. And what it is we get this big ramp up. You can see this is starting to turn down here. So we're probably going to get to this mode. And this one should actually continue on, but we might get everything to go into this maintenance mode all similar times. We'll have to see as we go through the next several months what this looks like. So what that tells you is this angle of attack of these moving averages are likely to continue on this angle, and this will be very substantial, because we look at, I'm going to clear these lines off now, and what we look at is we look at the rate of change, or the amount of price movement, 33.55 to 34.55, 100 points. So literally it's going to be 35.55 next month, 36.55 if we maintain a reasonable rate of change here on these moving averages. And this is how I use moving averages to determine how these trends are going to hold. Now the dots here and the market grid actually give me expectations for where the market could go based on a volatility range, not on standard deviations like a Bollinger Bands do or anything like that. What the PPMs do is they actually measure actual price volatility by bars. They have a 3 and 5 bar look back. They figure out that there's a Fibonacci calculation for upside prices and downside prices, and you can really use these numbers to build your expectations for the model. You apply a little theory, Elliott wave, a couple other things, those weekly, daily charts, and bingo, you should have a pretty good handle on the markets. Now, even with this crazy volatility that we've seen, all of these numbers continue to work. It's about 20% of the time that we ever exceed any of the numbers on the market grid on a monthly. You can see we've had a couple little print throughs, but if you counted up all the bars, they're about 20% of the time. So we know when we see that is beyond at least a standard deviation, maybe a standard deviation and a half of price action, and usually the market's going to pull back in. So those are where, when you see that type of price action, they're usually a buy. That's why the STX buy signal actually works, or the RTX signal works, because we've exceeded that normal range volatility, and it wants to come back into that normal volatility. So you get a flat or pull back until it stabilizes, and that's what's going on with all of the market grids and all this stuff. And I live and breathe these things forever, and I think there is, under understanding my process, there's a video on understanding the market grid, and I'm getting very close to having market grid in Portfolio Expert on every symbol in our database. It's going to be awesome when it's done. So anyway, but we're looking at all of this stuff. So back to the charts. What you're seeing here is exactly all of these dynamics I just discussed, going through the daily, weekly, and monthly. You're seeing exactly how these trends are set up. So short-term trend goes all the way back to the question. You got to, I always tell people, be careful of the question you ask me. The answer may be really long, but the question was, how could you have no VIG or no real momentum and the market's going up? And that's what it is. It's what's driving the markets right now are these monthly and weekly trends. That's why when that buy the dip is still the strategy. That's why it worked so good yesterday. If when it was down right at that extreme, I had painted out the extremes between 38.40 down around 38.25. Those happen to be in the market grid numbers. We printed down just below that 10-week moving average. The same thing happened, you know, as far as that goes. Let's see here. I just want to make sure. All right, just want to make sure the chat line's still working. Yeah, Sean, that's exactly right. But I think it was you that answered a question, so thanks for that, man. That was good. That was good stuff. You know, that's this chat line can really get me into some of these roles and understanding things. So let's go. Let's do this. Do you guys want me to go through this analysis on the NASDAQ? I'll wait for you to answer. Yeah, John Rawson, that's funny. The physics papers, a lot of physics talk the same. Yeah. I always get in trouble at home because explaining that it's all about physics. Yeah, we'll get through the individual stocks. So, okay. All right. All right. So let's do, so my typical run, and I apologize again for all the screwy stuff. At least I know what's going on now. And I suspect the voice is all real good. It looks like it's just pegging out better than my previous mic. So not sure what that's all about. Anyway, yeah, yeah, I hear you, Traumatic. Thanks, man. And Traumatic, thank you again. Great talk yesterday. Yeah, exactly. It's all based. Listen, when you start looking at trends, it's all the higher lows thing. What I'm wondering though is, are we gonna stall before we go higher? So we won't know a month of. All right, so let's go ahead and do NQ, and let's hit on this. It's very interesting, I think, and I've talked a ton about the spread on the S&P. So I'm going to go through a complete run here. We're going to do NASDAQ. I'm just going to roll right through. I want to talk about the 10-year. I want to talk about the yield curve a little bit, and we'll set that up and go on. All right. So let's go. Let's take a look here. It's interesting. I mentioned this in last night's video when I was covering the NASDAQ, is it's just struggling to get back above this 40-period moving average. Even today, I mean, look at it. It's only up, 0.43. It's lagging big time. And I guess I probably should touch on the Russell pattern too. So we got a lot of work to do here, folks. So I'll try not to get too long-winded on any area, but this is something that's interesting. Where the 40-day moving average 13,232, last trade 13,246. So we're just above it right now, but it's struggling. One of the things that concerns me with this pattern is we have a minus 0.32 on ppm1. That's going to supply a lot of resistance right at the STX level. Don't think we're not going to get the STX today. But that I'm saying STX, RTX at 13,587. We're not going to get up there. We've got R1 13,285. So the high so far, let me get on the right bar. The high so far today, 13,295. R1, 13,285. I talked about this last night. We could see R1, and I thought S2, it was spot on, just about almost. Actually, we did an S3. So we got an R1, S3, just like all the markets. So we're still within the confines of expectations for this range for today, even, you know, and it looks like it's trying to fade just a touch at the moment. But we'll take a look at the weekly, which I think this thing becomes really reviewing, and I think maybe more than ever, the spread trade that I've been talking about is about to accelerate again. Otherwise, Russell versus the NASDAQ has been a wonderful trade. I actually talked to somebody yesterday, and they said they made a ton of money off of that trade. So come up with more of them, and when I do, I will talk about them. I don't really usually put out any real trading advice at that level. So, but that's what the software is for. Okay, so anyway, here we are. This is the number I've been talking about, the 10-week moving average, right here. 13,197. We're now at 13,232, so we're right above that. The 40-day and the 10-week are going to be similar numbers in that, if you think about it, they're very similar numbers. You get in how they're calculating, but the point is that we did spike below the grid, but if you look at the grid, it's setting up what I call a mini dragon head, which is a consolidation. It's going to be very difficult to get above this RXT number, which is 14,125 in this pattern. And look at the PPMs on the weekly. They are fading. They are on phase by this little uptick today. These update real time as the market trades. They're not playing. Okay, there's still, we've crossed first, second derivative. We could be in that maintenance phase. Let me show you that, what I was talking about earlier, just so you can see this pattern. And this basically is that three-phase reset. So we could be going into, we have been here into this maintenance mode that I talked about. So this is momentum precedes price. You go, let's take the next level up here, and then we get a boost here, and then this boost here. And let me explain this a little bit further. So if you've been listening here for the last 20 minutes or so, these three phases, this last boost of momentum is the final boost of this particular sequence. So we're in the final phases. It's just a matter of how far or has this thing already completed. If you recall, I talked about this reversal that we got where I put an arrow here. This reversal bar made a new high. We got an outside reversal last week, and I talked about that on the video on Sunday night. And this is still a very valid situation. If we close lower on Friday, lower is, let me get that number for you. If we close below 13,576, we're trying to get back up there. Is that the right number? Yeah, 13,576. If we got above that, then that would negate the outside reversal bar. If we close lower, then that's going to tell us there's probably at least one more week, maybe 2 weeks of lower prices, but I'm going to put a but in there. This move that we went down to, my thoughts originally when we got the outside reversal, probably go back and listen to the NASDAQ analysis on Sunday night that I did. I said, we're probably going to go down to the 21-week moving average. I thought the 10-week would happen. We almost got there yesterday, 21-week, 12,570. That was the number I was talking about. There was somebody going, seriously you think the NASDAQ futures are going into 12,000 handle? And not only did they did, and this is exactly was the extreme. We hit 12,757, and that was related basically to the STX number and some other stuff that happened there. But let's go to next level, and I set up the trends here. Let's just look at the next level. Monthly is just like, only stronger. I'm going to pull this back a little bit. Only stronger than what we saw in the other in the S&P, and this has been the case. Even though on a relative basis we haven't been moving the same momentum here, there's still this trajectory that I was talking about. These moving averages here are monthly. So think about this. You're looking at 5, 6, 8 months to go sideways and try to bounce off of this 10-period moving average before you could even get this thing in any phase that would even begin to look like this momentum would start to die. But look, everything's set up just like I was showing you on the S&P. It's the same. So the question is, are we going to get this and maintenance? Is this the spike? Did momentum just get triggered even here or here? And now we're into that next phase. But what's interesting, when you get all three triggers, I'm going to clear this out. When you get all three triggers like what we got basically around the same time here, this was the point where these peaks are. I didn't get it drawn right on here, but these three peaks, when that momentum got set, that is when they do it all at the same time, you get this huge rally. Normally they go like I showed you before, where the second one lags, the momentum peak comes over here, and this one comes over here somewhere. And that's typically how they go, because each one of these are tracking a different length of moving average. And that's what, because PPM1's tracking the 10-month, PPM2 the 21, and the 40 on the PPM3. And all this is doing is actually showing you that this momentum has all triggered at the same time, which was very interesting, especially since when we took out last year's high, right? Is that we actually did this pattern where we got the outside bar, we closed lower that month, and then we got through that. So I'm going to actually just cue you folks in, and just to remind you, there's a video. Whenever you see an outside reversal bar, I won't reteach it right now, but there is a video. I'm trying to think when it was. Whenever the Apple was doing their split, I had a video on shorting Apple. But the most important part of that video of shorting Apple was I set up all the rules for a reversal pattern. It had a reversal. It was actually an awesome trade that I set up there, and that you should learn that trade. It's free. It's definitely good. So yeah, this is TradeStation I'm on. Yep. So almost everybody's TradeStation looks a little different because we all set them up different. So, okay. So we got through that. Let's go to the interest rates, and let's see if I can get rolling downhill here pretty fast. So here we are, 10-year up almost 2% again. We're looking at 1.389, 1.4%. This is huge, okay? I'm going to show you some numbers, but look at the PPMs. And we also, when we got that big rally, we got that big push. We're getting the secondary set, and we're doing it exactly the same way again, where the triggers on the momentum are happening just slightly different, but they're definitely pushing that up. It's almost, you have to go to a weekly chart to really see this thing happening here. So this is the typical setup. I guess I end up getting on these threads from just showing you what this thing does. Oh, nice. Here's the momentum again. You get the 3 sets like here. And it's interesting because you can get any dramatic move, but this is what I've been talking about for months, that we're going to at least 1.4. I think ultimately we're heading up here to 2% on the 10-year. And this classic, where, like I said, maintenance mode, reset. And the thing I talked about this, I think last week, is that not only are they setting momentum, the momentum on the PPMs is still expanding. So we're at 4.05, 3.46, and this is a weekly chart. So this is pretty significant from that standpoint. If we go in and finally look at the longer term charts and we look at the secular trend here, you'll see that I thought we were going to get up to the 21 week moving average 1.18. We went right through that. Look at these PPMs over here. They're just skyrocketing. You know, you're looking at just straight up, and momentum is insane. I'm not sure I've seen these kind of numbers. On PPM 1, it's at 10.17. PPM 2 is still negative, so this is still rounding off. And this market most likely won't get into even a minor high until the 10 and 21 period moving averages actually cross each other, which I suspect is 3 or 4 months from now. So we could run right into this 160, 180 range on this. And this is going to, this type of action is actually going to be yeah, so a good question again. Somebody wants to know, explain why the market's not rolling over if interest goes up. Yeah, because it's interesting, because what's happening, because of all of these configurations, there's too many cliches, too many things that happen in the markets that people like to make them like, well, when markets go up, interest rates go down. That's not the case. You oftentimes will see rates going up like this. And this is when an economic cycle, in the beginning of economic cycle, which is where we are, you know, I know that there's 10.7 million people out of work, but when you see this economy coming back, one of the things that's I mentioned on a video the other night is that the manufacturing sector should be coming back way faster than they have, but they have not hired enough people. They have not brought capacity back on. It goes to the story I told earlier about Malibu ski boats. They can't make enough of them. Well, their facility, they had to start outsourcing things they used to do in-house just to fill the gap so they could get some parts made somewhere else to meet the demand. And so there are industries that are off the map on demand that are 2 and 3 times, and things are lagging. I just got my email the other day that my area is available for Starlink, okay? And so I want to get Starlink, but then the first thing out of their mouth was, could be 4 to 6 months before you get your equipment. You know, so I don't know if they're just testing the water on things or whatever, but interest rates will go up early in the cycle, and then they'll flatten out, maybe go down. We're in such a unique situation. You can't take the metrics that you're used to hearing about this when this happens, that happens. That's the thing. Like I said, the guys that are talking about bubbles and crash videos and all that stuff, they're digging deep. I mean, really deep, to find a ratio of this versus that tells you this. And they're trying to find the magic formula. And in this world, news, it's how to be first, and the markets, it's how to call the top or the bottom, right? And you know what I do on this channel, I just basically I'm looking at trends, I'm following the trends, giving setups on where I think the parameters are going to go. That's I think you have to have that perspective to be able to trade well and to get some ideas. That's what the market grid that's on the screen right now, all those things, that's what they do. And so the result of all that is you're going to have interest rates in different cycles versus that. And there's another factor that's driving interest rates up as we look at the 10-year here. Let me just move it back here. As people are bailing, they're pulling their money out of the United States so fast, it's scary right now. And because a lot of this money gets hosted into the treasuries. And this tells you everything about what a money flow on a planet. And everybody, we're usually, what the old story, if the US gets a cold, the rest of the world gets the flu, something like that. In this case, we're coming back really fast by turning on the economy. The narrative that I've been talking about on the show today is that what we're really seeing here is actually a restructuring of the economy and hot and cold spots. You know, everybody calls it the K, you know, the K recovery, not the V, right? The K. And so there's elements that are working and there's stuff that's not. And the reason why the stuff that's not is just because of the shutdown of all the industries, of all of us people getting together. I'm really upset about this because I want to do a conference and have a bunch of us get together. I think it'd be really a fun time, but there's a lot of things I think we could put together, workshops and all types of things. So I'm hoping that we can all get back together like the old days and do conferences. That'll be really fun. So I'm looking forward to that day, we'll say. Is GME really at 64? That's awesome. Yeah, that's a good one. When China sneezes, we get locked down for 18 months. Yeah. Yeah. Boy, that's really cool. I wanted to cover that. And I did talk about it last week. I told you that I think, and we'll cover GM here in a few minutes, but GME is likely to go back to $150, 200, I think. And it's going to be really interesting if that happens. You know, they got rid of the CFO resigned. You aren't going to believe. I'm going to save the GME talk, okay? But let's stay with this. So interest rates definitely can go up when the markets are going up, especially in this cycle. And you have to understand the money. There's a lot of dynamics. I'll think about that, and maybe next week I can really go deep into the dynamics of how the markets got to where they are. So let's go back to the interest rates here. Yeah, we're going to go through all the stocks here. I'm going to hang around for, it's 1:21 my time here, Mountain Time. So markets close in about 35 minutes. We'll take a look at the market close, but yeah, we'll do some stocks. We'll probably do the stocks. We'll do some stocks in about right after the close. We'll do a half hour of stocks, okay? You know, it's interesting. Anyway, I'm going to stay. I'm looking at you guys talking. I'm going to go ahead and do this. So let's go from interest rates. We got to do the dollar real quick. Maybe this is as good a place as any is the dollar. I've talked about this is going to be your big support line on the dollar down here at the got to bring it up. Oops. At 86.88 down here at the 200-month moving average. That's going to be your mark. We're going to get stuck in the grid. We'll look at the PPMs. They're down big numbers here, down minus 0.24, minus 3.8, minus 11. So Dollars in a secular bear market for sure, but I think it's hit its extreme. There could be one more low, and we should actually be able to stay above this 86 number. I think it's 86.88. Yeah, 86.88. That's going to be the number where we're likely to stay from. Okay. Let's go to gold. I cover this so thoroughly in the daily videos. There's really nothing here to talk about except for the PPMs are all turning over on a monthly basis. I still think this is what I call the dragon head formation, and typically dragon heads resolve themselves in the direction of the previous trend. So let me explain that just a little bit more. So this is the previous trend. This is the formation of the what I call the dragon head formation. Dragon heads are a consolidation, and then once this thing is done, you'll get bars in here. They'll stay in this context, and then you usually end up going up. So maybe it's a retest of the 2098 high here. We'll see what sets up here. But for right now, we are months and months away from that event. Now, there could be some short-term movement back into this Fibonacci grid where we get back into 1887, 1928, maybe as high as 0.618 retracement 1958. We got a reversal last month right from that level. There's another one up here. So there's just a lot there from that standpoint. So okay. Yeah, I just cover gold too well. Let's take a quick look because I don't cover silver. Let's take a quick look at silver. And silver's kind of retesting that spike high at that 30.50, what we had a high 30.40 today. So it's trying. I've talked a lot. This is a monthly. Let me back up a little bit. Let's go into a daily chart here. And daily chart continues to hover just above these 10 period moving average, 0.28, 0.41, and 0.12. Like I said, I don't cover this on a regular basis, but we're definitely in a trend mode. We're going to stay in the grid right now, more of a volatility sideways range since we got that spike. The spike here was at, that high was 30, I think it was 30.50. So now we're just seeing this thing. Yeah, here it is over here. The 30, actually 30.40. So we actually have a potential of a working toward a, you know, a double. Hang on a second here. Let's go to this chart here. Okay, there we go. That's a little better look. This was the 30.40, whatever number I was looking at, the high today, 28.47. So we're looking at the weekly 28.56 is R2, S1 26.71. So that we're really just, we're going to stay in this range. But you can see this is actually what I was talking about on this dragon head formation. And this is the, something comes out of this market grid. So this is the direction, dragon head here, and this is kind of elongated, and then it usually resolves itself in that direction. As I mentioned, ppm1, ppm2, and ppm3 on an intermediate basis. Very powerful. I mentioned, I know last week that the 10-week moving average was going to be key, 2642. I was talking about it going down there. It did. It bounced. We got just below that level, and then off we go. Let me just clear this out because this freezes my screen. So the low that week, 2624, was the 10-week moving average. The low, 2615. So we got just below that. That 10-period moving average, a simple 10-period moving average on a weekly chart, should be your demand line. Should be able to continue to play off of this. The trajectory, if you recall when we were talking about that, it's a much shallower view of the world when you look at the trajectory on silver. And hang on here. So if you remember some of when we were looking at the indexes, they were almost vertical. You've got just a slight trajectory, and they're very close together. And so you're seeing that the support levels are moving up toward 27, 28. So ultimately, you should be able to move up, test that high, and possibly accelerate the trend a little bit. The question is, can you get the full swing where you get this being the low and then projecting a swing trade up on this length here? And that's the question. And I'll keep an eye on this thing. If I see this setting up, this pattern setting up, I'll talk about that. But same old, like I talked about. Actually, let me get rid of this. It's the same patterns I've talked about, where you see the peak in momentum on the short-term indicator. You get the price movement, you get the secondary peak, you get the next price movement, and now you've faded through where you got the second and third trajectory to get that going. So I can tell right now, folks, and all the confusion, I was trying to get things going and voice going. I'm going to take just a break for a second because I need some energy. I need some Runa. Hang on one second. I forgot to get that earlier. Okay, I'm back. Thanks for your patience. Best energy drink there is. That's interesting because I didn't think I had a green screen on this, but anyway, Runa. It's a tea, iced tea with a little flavoring. Not a lot of additives. Not like a Red Bull. The stuff is amazing. Um, anyway, okay. So let's get back to where we were here. And let's move on. And usually after this, I'll do Bitcoin and Ether, and then I think we start to. Oh yeah, and then we'll hit on GME. Yeah, you know what? It's making me crazy to. Wow, look at GME fly up 50. I love it. I love it. Okay, yeah, I'm going to divert just for a minute, but GME is just running big time, right? Um, One of the things I've been waiting for, hang on, I'm going to put it on screen. One of the things I've been waiting for in this stock is this gap up here. I'm just going to cover this. We're going to go back and we'll do Bitcoin, but this is, I mean, this thing's running here. We're up 50%. That's amazing. What kind of volume we've got? 30 million. I love it. I talked about this last week, and one of the things that I talked about was that I think the same guys are shorting this thing again. And I think they're going to get caught again. Will it go to 400? I don't think so. But I do believe it's going to try to fill this gap, and the bottom end of that gap is 212. And I talked about this when we were trading 40, 50 bucks last week. And you know, there's something here, folks, and I just want to say it. I don't know if very many of you had the opportunity to watch the hearing last week with Vlad and the guy from Citadel and what was it, whatever this kitty guy, the guy from Reddit that started the whole thread. He was on there. I was super impressed with everybody, including that guy who was just a retail investor like you folks, and he was very intelligent. He did his research, and he thought the company was worth more than $4. Okay, I think he bought it around 20 is when he bought it. But this is something that I talked about last week, and you start looking. This company right now is worth $3.8 billion in valuation of the stock. It's at 70. This is crazy. Okay, I'm watching it trade, so wish I could be on the screen at the same time. But yeah, this thing's running big time here. What's the high of the day? 71.38. It's trading 70.05 right now. But this company is worth a lot of money right now. It's, you know, if you were an insider at GME, you're not feeling like you're going out of business all of a sudden. In fact, you've got, you know, your money's your stock is worth a lot of money. And so this company is likely to come and recreate itself completely and make and just suck all these guys down. The CFO walked out, I think, yesterday, and they're going to get a new person in that mode. And I think what's happening is they're reshuffling the deck at the top end, and they're going to come up with some idea. Who knows? Maybe there'll be a big gaming streaming service instead of brick and mortar. Who knows? One of the guys that one of my associates was telling me, the younger guy was saying that, you know, it's just the worst place in the world to walk into. Yeah, we're trading 73 now on this thing, up 63%. So it's definitely on a run. Everybody's stampeding in. This is going to get interesting. We could probably do the rest of the show and just watch GME trade, right, instead of the close. Yeah, we're up 30. Yeah, this thing is up 65%. We're at 75 now. So anyway, yeah, so let me go back on screen here, but I just think, let me get off screen here, and let's, I'll get the right screen yet. There we go. Let's put up a 5-minute chart on this for a minute. Let's spend a couple of minutes here. I mean, look at this puppy. Hitman, that was that was the best line in that thing. You're absolutely right. That was priceless. So let's watch this for a minute. You guys good with that? I want you to see, like, this is a 5-minute chart. We got an RXT sell signal, 2 bars sideways, rocket again. Look at this thing, 70s. Man, this thing is to the moon, right? All right, let's do this. Let's watch this thing. Look at this, man. 78 now. This is awesome. Especially since I own it. Even better. Wow. Yeah, that's impressive. That's impressive. Okay. Yeah. Yeah, so it just keep printing. We're 78.15. Are they gonna pull some crap and halt this thing or something? That's gonna piss off a lot of folks. Yeah, there you go. Good call. I'm like, why isn't it trading more? They halted it. Man. Guys, I'm raising I'm raising the bullshit flag on this, right? This is such stupid shit. I don't get it. Yeah, so let's go to AMC. Man, I'm telling you. Oh, there's so much I want to talk to you about. And I can't. It's just I am actually, just so you know, so since we're sitting here and I'm just trying to recover from this thing. Here's AMC trading up only 9%. Let's go back to GME real quick. Yeah, look at that. They halted it. It was about to get an RXT sell signal right as they halted it. Man. I know. I don't. They don't want us to make any money, do they? This is disturbing to me, and wow. I'm sorry. I'm just trying to process what's happening here in real time, and isn't the halt automatic? No, there's stocks that go up big numbers on the market. There's circuit breakers, but the fact that they're playing this game, they must have they must have been looking at. They've got a guy in a room with a screen that all he's doing is sitting there, and yeah, I don't know who's halting this. That's if it's SEC. I don't know. I mean, if you guys, I'm trying to keep my eyes on the screen, so if you guys hear anything, let me know what's going on. So, oh my goodness, yeah, I'm just stunned by this stuff. I'll be honest with you. I'm stunned that they will turn these markets off like this. They are, man, I have to tell you folks, I love this stuff. I have spent my entire life since I was 26 years old. This is all I've done. And to see bullshit like this, to see them screw this up like this, yeah, it's just, man. There's no words right now I can actually say. 'Cause I just want to go into, a Dave Portnoy meltdown right now. So amazing. I guess I'll get out of this, but this really, yeah, this we're going to go into some stocks here. This is just disturbing, but yeah, this is depressing because my concern is that they're going to anytime. Man, I'm out of words. I'm going to go back to what I said early when I finally got this thing running right earlier today on this show. Is it's all about the worry of them, the government, losing control over us, right? That's what this is. Everything's been about. We all know this. And now this, now we can't. Let's see if this works. Does this screen work? Can you guys actually see me and everything right now on this screen? I haven't tried this. I hope you sold, Wayne. Oh, there it goes. Okay, they're back trading again. You can see it on the screen now. We're back trading. What the hell, folks? We're at 84, just going vertical. So let's do something even screwier. Boy, what they say, they got a lot of explaining to do on this stuff. So, yeah, look at this. We're almost 90 now. This thing's all over the place. Traded 89. I don't know if you guys are enjoying this, but I am. So you can hear me okay on this page, right? And hear and see me, correct? Yeah, I agree, Tanyi. I believe that's absolutely right. My hope is that Elon Musk takes his Starlight and sets up an entire new internet off of that. I mean, this is crazy. Here we are at 90 prints, 91. This is absolutely crazy. Yeah, this is crazy. So up 103%. I'm going to switch over to the daily chart here, and let's go 60 minute. Yeah, that's even. Yeah, look at this. We're above the 200-day moving average. I got to go to daily here, and then we're going to move on, and we're going to try to focus in on the market close. Hang with me one second while I do something here. I'm going to go. Just want to set something up so you guys don't want to see this stuff. Give me just a second here. So we'll get set up for coming into the close. Like I promised you guys, I'm going to hang on to, let's see if I get everything working here. Okay. Yeah, I haven't really. Yeah, we're going to go back here. I wanted to set something up real quick. We're 9170 now, going back on screen. Like I said, this works, right? This page works. Halted again. Where are you getting that information so quickly, Mario or Carlo? It sure is stopped. That coming up on your service that you're on? Anyway. All right. Yeah, let's do Bitcoin. Things stop trading again. I guess it's going to be up 200%. This is awesome. I've been waiting for this explosion. Do you folks remember me talking about GME last week? And it was around 50. I had this little thing I went on, and I told you 150 to 200, fill that gap. There's the gap here on the page that I've got up here. That's going to happen. And I wouldn't be surprised that this company, like I said, I think it's going to emerge as something. Think about setting their, I don't know, let's go back to, let me get a date here. Even go back to last October. Excuse me one second here. Going back to last October when it was $10 and this company was worth maybe $350 million, and now it's worth, at this price, at 91, we're looking at almost probably $6.5 to $7 billion market cap on this stock right now. It's hilarious. I mean, you gotta love it. It's probably a good idea that none of the guys at GME were selling their insider stock during this thing, but it's going to get very interesting. Yeah. So, okay, man, I'm serious. I'm just trying to recover from the bullshit of shutting this stock down. It's really eating at me, and I want to know why. I can tell you back in the flash crash back in 2010, I guess it was 11. Um, I got caught in that thing, and that just really upset me even more. It's ridiculous. Yeah, I know. Nobody at GME sold. Exactly. And they were smart because they would have been talking to Maxine too and trying to explain their action and were they part of the conspiracy. And listen, this is something, if you guys, all you have to do is watch that, and you have to know, if you ever end up in court for anything and somebody says, is it true that blah, 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 a yes or no answer only, right? A yes or no answer only. If anyone ever says that to you, what they are really saying is, yes, I'm right, no, I'm right. So please answer it yes or no. So never answer that question if you get in that position, ever. Okay? Yeah, so Steve, you think that this is just a normal circuit breaker, huh? Okay. Was it 15 minutes? We'll have to see how it goes then. We'll see. Silver Jigger. You just don't give up, do you, man? I love you, brother. I really do. Okay. So we'll see when it opens up. You guys yell at me when it does. Let's take 8 minutes to go to the close. They're printing the S&P up 26 right at the high. What did I tell you was the RTX sell signal? I think this is it. Very close. Let's see here. Daily 3930.02. So we close over that number. If they jack this thing into the close, we're going to get this to issue an RTX sell signal. And we probably have more crazy volatility. The good news is that the market grid will expand for tomorrow. And I'll set this up in tonight's video the best I can once we see how this finishes up. And we've got about 7 minutes to go. Last trade here. Last trade, 25, 26. We need five handles on the run here. That's a lot to ask for in 7 minutes, but we certainly can get that. Let's take a look and just see what's going on in some of the other stuff here. You know what I'm going to do is I'm going to fill the gap for a couple minutes. I want to talk about this spread here. And this is not sure. I got to see what price we got it set on. Yeah. So this is the Russell versus the NASDAQ. I've been screaming about this going back to last July and August. This was the easiest trade I've ever seen, possibly, and certainly the easiest trade I've seen for a long time. And it's not done. Let me show you something. Let's do this, and then we'll go back, watch the close, and we're gonna I'm gonna go through and you really are silver jigga. Okay, so if we go to weekly, this is what I want to show you here is let me move this out of the way. But you can see this trade has a long ways to go. So yeah, we're definitely accelerating. We went through a little short hesitation. So NASDAQ is on. So let's talk about what that really means here. And this is something then we'll watch the close here. I'll just be able to go off on this for just a minute. But this right here, this chart here is being driven by the higher interest rates, by the economy coming back on to the next level. It's the J&J rally that we saw today, another vaccine rally. And all this is doing is going to continue to flow money to these secondary companies. And as America opens up, we'll see what I think is going to be interesting, actually. One of the things that I'm watching for from an America landscape viewpoint is a lot of these small businesses. There have been small businesses that were amazing small businesses that have been crushed and in some cases eliminated, right? These are still the same people. They're smart. I'm hoping that we see an emergence of some sort of funding available that will help these people get back in. Outside of the government, private funding, not government funding. Somebody I saw I think on a Twitter the other day, I made a comment on, is somebody was talking about the IRS is giving out some loans and all this stuff. I was like, you don't want that money. Any of the government money, at some point in time, on page 2113 of the loan agreement will say, if you make too much money or disrupt the wrong people, we will take your business away from you. There's something in there. You don't want that money. Okay, I'm done. That's my minimum rant. That's all that I'm allowed to do. So let's go back and take a look at the charts and watch the close, and then I'm going to solicit a bunch of stocks from you guys, and I'll go for a half hour, and we'll do that. Okay. So here we are, printing at the highs, about to make new highs. Yeah, they want that RXT sell. That would be awesome. 47 handles, up 122. We're actually, from yesterday's low, we are 120 handles higher. A handle is from 24 to 25. So 100 handles. Let's see if they can print this up. Man, what would I do without you guys? Thank you. Yeah, that's unbelievable. I was just looking at GME. They halted it, still halted. They're not going to let you trade. That not going to let you. You're stuck. If you wanted to get out, you can't get out. So, anyway, everything should be fine. Yeah, that's what I was just saying, Tanley. That they halted this shit right into the close. So they want you stuck in. They want you stuck in. Yeah, so here we go. There's our bell. And we didn't get the STXL. Let's just take a look at that real quick. Yeah. What a bunch of wankers. Okay. So we're just right at STX, so no STXL. We got confirmation of the reversal on the pattern. We got PPM 1 and 2 and 3, all the uptick. So we got some positives going here. Question is, what was the high that we had? 50, 39.50, 39.50.43. So plenty to work on tonight. All right, so as we always do, and I apologize for the delay today. So let's give me a list of stocks. We definitely have to go through Apple and Tesla. And let's give me some individual stocks, and we'll get through it. All right, let's hold up right there. And yeah, I did Bitcoin earlier, so that'll be in the replay. We'll have this thing marked up so you'll know where that's at, okay? So let me go ahead and I'll dig into some of these stocks. We'll start off with Apple. I'm going to try to be really efficient here, and I will do Apple was really not able to confirm its reversal from yesterday. PPMs are looking very weak. This is a daily chart here, and yeah, I'm just looking at you guys. These are good stocks to look at today, but I'll just kind of run through a bunch of these and then maybe do a couple last requests. But you can see the PPMs here are just fading, and I've been going back probably a week or so. I told you folks that on the daily videos that this market is about to roll over, that Apple and Tesla were rolling over and they weren't going to be players. I didn't see us getting to an all-time new high without them. And so there has been a little bit of rotation in the top end of leadership, and we've seen energy come on. Also, you know, if you have to go back to several videos ago, I told you financials, energy is where the play is right now. You want to focus on those sectors. Those of you using the WaveTech tool, make sure I try to trigger that stuff in the daily videos. The daily videos are meant primarily for the support of software users and an update and a context for folks using the software, but it's also used. I do give you a lot of information you can use to trade off in the market grid. I always make sure that you get actually the view of each market grid on the daily and the weekly, so you can get those off screen. And so that's kind of a freebie you don't have to pay to get. But this pattern is just, there's no way to come up with a bullish scenario. Now, when we go to the weekly chart on Apple, we're barely holding above the 21-week moving average. PPMs are absolutely crap. They're just all declining as well. We've got a negative PPM 1. Tells us major resistance on Apple at 132. That's going to be a ceiling for the moment. So 132, and if we just look at the market grid right now, we're looking at 133 as R2. So 132, 133 is going to be top end. Let's do Tesla. Now, Tesla went down to its 21 period moving average. I was talking about this. I really didn't cover this. I'm hesitant to start mentioning a lot of stocks in the daily videos just because that's just going to clutter up. The other night, I had a nightmare where my hard drive ran out. It dumped when it tried to do an auto save. When my editing programs went down, I lost all my video. I had to do the video twice in one night, which was extremely painful. And but this thing here, when we got down to that 21, the 21 period moving average is at a 2.50. There was a 10% or less probability for it to stay below that level. That was a screaming buy at 638 on this thing. And now we've got resistance though at the 790 level, which is the 10-week moving average. The positive, looking at the weekly chart on Tesla, is that the 10-week is still rising at that 790. If you folks have been watching the show for a little while, I'm talking about the trajectory of those moving averages, the angle of attack. So that angle tends to be, sometimes I'll use a term like it's acting as a magnet. So 790 is where this stock wants to go. It wants to get 790 or higher in this pattern, and we'll see how this thing plays. This is a weekly chart, so let's look at the daily. It kind of went top down. So we're looking, this is interesting, very similar to Apple, but stronger in the overall pattern, but lots of overhead resistance right now. at the 10-period moving average. 775 is going to be tough to trade through. So I just told you on the weekly 790, but there's going to be a couple days, so we may stay under that 790 and then try to move back up into those averages. The medium average, which is the 21 and 40, 814 to 805 on Tesla. That's going to be probably the ceiling even if we get back to 790, but there's going to be heavy resistance 775, and that number is dropping by 10. It's 765 tomorrow. So 765, 768 tomorrow will be resistance point. If it did get above that, then we're looking at the 790, 8, we'll call it 790, 805 on the upside. Downside looks like it's finished. It really, that was a very climactic sell-off yesterday. So this whole pattern that I was talking about going back about 8-10 days ago, rolling over, that's completed for the moment, but there's still other issues out here like I just showed you. And if we just go real quick, I'm going to go one more step onto a monthly chart of Tesla. This is really where the story is going to lie here in this pattern. We're going to, and there's going to be a lot of opportunity for trading here. So just get that straight. Is this market grid is a huge grid on a monthly. So if we look at the grid for February, it was the extreme downside 601, the low was 619. So it was pretty close on the SDX. Extreme upside this month is 985. We didn't get anywhere close to that, but what we did get to was R2 889. So what I suspect, depending on how we close here on coming into Friday, is if you can close in this range, then you're going to look at maybe those numbers I talked about, the 814. There's going to be some stuff there, but a few days of consolidation and sideways will set this up for a move potentially up into maybe, I don't know what the grid is for next month, but it will be updated. When is the last trading day? Yeah, so last trading day is Friday. So Monday will be a new month. So on Monday I'll have a new calculation there. So is that aftermarket 110 on GME? Is that what you're telling me? Yeah, 120. Wow. Yeah, my chart does not reflect this, but we're looking at 123 in the aftermarket on GME. We're at let's see here. None of my charts, I don't have them set to update in the aftermarket, so we're not going to see anything. So the price is good enough. 122, 47 million shares traded. A lot going on. What's the high of the day? Oh, it doesn't. Yeah. Yeah, so 121 on that stock. Wow. Yeah, that's insane actually. I'm just looking at yeah. Well, that'll make for a good day if you own that thing. Okay. Yeah, folks, we got quite a few people. Let's keep going here. And next stock that we're going to do, make sure you hit the like button. YouTube likes that, and we've got quite a few folks watching. Let's go ahead and let's do. I'm going to attempt to not go in on a rant on this stock. I'm going to do my best, but I'm going to do. I am going to talk about this just a little bit. This is PLTR, most dangerous stock in the world. I think this thing could go back to 13. I was kind of trolling somebody on Twitter. It's like, what are you going to do when Cathie Wood runs out of money? And I really think I also put out there that I think there's a danger in what's going on with the whole scenario of the transparency that ARK Investments is putting out there. So they're going, hey, we bought all this stock, and then people are stamping and trading off of them. So let's talk about that for a minute, because this is really what's going on in the world right now. We've got a lot of folks just, hey, that guy's buying it. We're all stampeding in, right? We're all going to go in. And that strategy will work. And man, I just thought of something. This is funny. Well, we got plenty of people watching, but I thought of something. I was last night when I was thinking about today's show, there was something I wanted to talk about, and this is a perfect, what happened has actually set this up. So I'm on Plantar. We'll go back to that in a second, but we're going to go to GME for a second, because I just want to see where it's trading. It's trading 123, but here's what I want to talk about. In the early 1990s, one of my very good friends ran one of the biggest day trading rooms down in Houston, Texas. And they had this guy named Shamu. He was the biggest trader in the room. They call him the whale, right? So they nicknamed him Shamu. And they were doing group trading. And group trading was, there were like 60 guys, 80 guys in this room. Everybody had terminals, high-speed hookups for 1990. I guess it was probably 92-ish, maybe 93, maybe 4. Been a long time ago. But what would happen is Shamu would call out a trade. I'm going into IBM on the bid. And everybody in the room would stampede in that trade. And it uptick, and Shamu would go, we're selling, blah, blah, blah. And they would go out of this thing, right? So it was called group trading. So what you saw on GME, going to GME, then we're going to go to Plantar. What you saw on GME, and I'm also going to cover this, talking about ARK and what's going on there. I think it's a very dangerous strategy. I've ran broker-dealers. I've worked in hedge funds. And I'm telling you that transparency will get you in trouble, Kathy Wood. It will get you in trouble. And I would shut that off tomorrow if I was her. But anyway, so what I'm talking about here is what we're seeing. Now we're seeing some selling. That GME's at 115. So we peaked out at 123 or 24. I'm not sure. I don't have the aftermarket screen up. But the point is what you're seeing is the Shamu trade. Everybody, hey, come on in, and everybody's piling in. So that will work to a large degree, but you need to know there's a lot of danger in that stuff. And I'm not being protected. You guys are all on your own. Guys and gals can do what you need to do. But the point is that this is actually group trading. And I mentioned last week to get reminiscences of a stock operator, and that book talks about the old consortiums and the SEC laws of 1931-33 actually went after these groups. And there were guys like J.P. Morgan, Joe Kennedy, a bunch of the big bankers in New York, and they would all get together and they would load up on stocks. Sound familiar? Yeah. And I'm telling you, these guys are going to pull out the old playbook on the GMEs, and that's what we saw today when you see this stampede going, right? Now we're back at 122 again, up 165% on GME. So now let's go to Plantar. I'm sorry about this. So Plantar, I'm going back to this right now. We're going on screen. Plantar is interesting, is it's another trade like this, but this company it's worse than GME. They don't have any history. They haven't been around very long. It's a new company. And we're going to find out at this point in time whether Miss Wood and ARK and all these people, they're making big bets. I saw a guy on Twitter, I don't think he has a big following, but he's trying to set up a channel and a young guy, seems pretty smart, but he's like going all in on this stock. Like, this is my stock. I'm going to make my name through buying this stock, telling everybody, hang in there, it's going to be in, HODL, all that stuff. And no one knows anything about this stock. What I do know about this stock is it's in a downtrend, and if it takes out $22, $22.50, takes that out, the next trade will be 13. It's going to collapse. I'm not saying it's going to happen, but I'd watch that number and be very careful in this thing, because this day right here, let me draw in a couple things and then I'll get off this rant. Yeah, trust me, Kathy Wood is, yeah. Yeah, so Kathy Wood has not been around for 20 years. She's only been around since around 2014. She's worked for mutual funds and stuff like that. Trust me. I'm not saying, yeah, so it's one of those things that there's only, yeah, I'm not going to go on a rant on ARK, but I've been talking about this. If you watch the video I did in rebuilding ARK, I don't have time to do this today, but if I showed you what our models are doing with Kathy Wood stocks, it's completely different. It's weighted different. In fact, we've been selling out of a lot of the stocks, like the Teslas and her top end, we don't even own them. She was down 6.5% yesterday. Okay. Dead cat bounced today, last time I looked, right? So she has anywhere from 2 to 3 times the risk of the S&P, and I talked about that in there. And now she might even have more, because she's so top heavy. That thing's going to tip over, and you won't believe what you'll see when this thing rolls over. Yeah, so anyway, she's actually, I could show you, she hasn't provided 20% returns. Yeah, only because of last year. Okay, so don't get me there. Anyway. Yeah, so I know Pete, I know who's behind this thing. I'm just looking at stock action. I'm telling you, this is not a good investment. Not right now. Buy it at 13. Okay, I'm done. I wouldn't base my career on this stock. And Peter's a really smart guy, and Elon Musk, old partner. I know all the stories here. So anyway. Yeah, so this is, since I went on that rant, look at ARKF. Look at their innovation. This is the daily pattern. This thing rolled over, was already rolling over. Just, it was very obvious anyway. And then we go over here to the weekly. That thing's topped out for now. Way too top heavy. I talked about this. Watch the video that when I rebuilt, I think it was ARK-K I rebuilt. Might have been G. I don't even know. I was going to do them all. It wasn't worth the time. If you look at all the whole ARK investment platform, they own almost all the same stocks across the board with a heavy weight at the top. Anyway, I go through that video, and anyway, it's yeah, you know what? Yeah, that's funny. I see I got a Kathy Wood fan. So yeah, so if it falls to 13, she's looking at 25, 20, fine. I'm 69 years old. I can't look at 2025 and all that shit. That's Warren Buffett bullshit. I watched Warren Buffett over the years, just take it in the shorts on a bunch of his stuff, and if you stick your head in the sand long enough and America's growing, then it works. But anyway, so okay, so ES is still moving up, I take it. But anyway, so enough of that. But this is a very dangerous ETF. I demonstrated when it was down in February 20, it had about 2 standard deviations more risk on the downside than the S&P did. And you will see, like yesterday, down 6%. What it's down today. on the F, you know, with the markets up, you know, everything's up. Nope. Call me wrong. You'll see I'm right later. Okay. Yeah. Listen, 15, 13, any of those levels on PLTR. I am sorry for going on those things. You get me going, get the old man going, you get in trouble. All right. So I'm not sure what these guys, BNGO, this is an interesting stock. I looked at this last week. I remember it just blew up. And I remember, you know, this is really just a wild pattern. You have the 10 period moving average at 873. We basically bounced off of that. PPM 1, 1390. This is a weekly we're looking at. It's going to go. I'm going to do, next I'm going to go and do AG, which is silver. And what we're looking at here is basically a nice strong PPM. We got the big spike. I assume this is one of the miners here, and we're seeing this slope. So we've got massive PPMs on the upside. That's whole trajectory is the support's going to move up to probably within, this is a weekly chart, within 2 weeks it'll be around $15.5, $16. So you get a pretty solid base below this one. And the only thing that's likely to set up here is one of these dragon heads, and I told you about it. There's one right here. It goes sideways and it usually resolves it to the upside. This looks like it could set up a larger pattern. The grid will start to come in next week as that goes on, but this is a very strong stock. Looks pretty good. We're looking at probably rock solid. Let me just see. Rock solid at around right now. Rock solid around 15.5 or so, trading 20s. Not going to get below that. Here's Churchill Capital. CCIV. Did I get that right? Yep, CCIV. Yeah. It's a complete collapse. Not sure what these folks do, but wow, this is a tough one. And there's not enough. Let me look at something here. Well, the good news, and there's not a lot of data here, but it looks like we're about to get an STX buy. It'll come back into the grid possibly. This is a tough one. I wish I could give you some better guidance on this one. This big gap down, maybe eventually you get up here to 50, 55, 58 to fill this gap up here. But that's going to be a tough one. I'm doing a GME check-in real quick. Now we're at 107, so we're backing off the 123 number. So that's still a good number, I think. Anyway, all right, so let's do some more. Let's do Boeing VA. This, like I said, today's rally was a vaccine rally, and this is perfect truth. This is exactly what it is on that. Let me just do something here. I actually meant to bring this up earlier, but I want to log out here 1 second. I want to bring up the Wave Tech real quick because I want to go back to that Buffett strategy that I set up a while back. The intermediate, so two things, and I set this up. I built this live on the channel. There's 9 symbols in here. They're all the Airline stocks, Boeing's in here. It's up 12% on the year. Not doing too bad. It was up 102% last year. And I told everybody a while back that you need to go, yeah, I would definitely do RIOT as well. And you see this thing's finally breaking a new high equity curve. If I go back, I told everybody you should switch over to the intermediate model and use this one. This thing's going vertical. It didn't do much last year, 18, but going back to around November of last year, I said we should go to intermediate. And if you go from there, it's up 26. It's up about 50% if you're using the intermediate. So let's look at some of the individual open positions here, and then I'll go back to TradeStation and we'll take a look at them there. But what we're looking at, here's Boeing. Actually came in on 11.16. It's still long. And it's got $17 profit. I'll go through the details here. But this is the current constituent list. These are the returns by symbol here. And then when we look at the summary page, it's going to show us the equity curve of how this thing's done going back to last year. The big deal last year was doing the daily switch to the weekly or, the weekly or the intermediate models on in November. And then that was the play. So let's take a look at Boeing here. You can see this is daily. I want to go to weekly. So I've been talking about this since last May, as I still think we're going to see the 200-day moving average. This may be the breakout point that we see finally. We're up 8.26% today. The key number will be the high that we put in December at 244. We get above that, then you're heading right to the 287 level. And I'm going to put on a Fibonacci as well of this. What I want to look at here is the price ratio tool. No current projections on this thing at this time. So I was hoping to see a Fibonacci projection. These old projections are probably valid out of this pattern, which are suggesting that you're looking at 273, 319, 348. What time are we getting to be? Yeah, it's half past. Let's do shop. Shop got an RXT sell signal on the 12th, February 12th, 2 weeks sideways. So this is where shop is probably a buy, but we're seeing the PPMs roll over. This is actually okay, this type of action here, is what we're seeing is the 10-period moving average, 1,249. What was the low? 1205. This is weekly. So that was opportunity. You want to buy against that 1250 number if you get a chance. And maybe let's go to a daily. This is a weekly view. Yeah, so this is always important when you look at the short-term chart here. What you're seeing is there's still a lot of work to be done. PPM1 is down 0.93. So you're going to be sandwiched between the 40 and the 10-period moving average. So 1240-ish is going to be your downside. Upside is going to be around 1376 to about 1408. There's Nicola. We'll take a look at this. It was interesting. We did trade into these. I had these Fibonacci projections. It's trying to turn up. This thing's got quite a sketchy history, I know, on some of the volatility that we've seen. But we're seeing PPMs all turn up at the same time, probably heading back toward the 27 to 31 level. Let's take a quick look at the weekly. Thanks, Derek. Appreciate it, man. I will definitely cover Zoom here. So yeah, so the weekly chart I said this was a big RXT sell in a weekly. That was actually a significant sell, and now we're looking at setting this thing up. The PPMs are trying to turn positive on a short term. Same thing, 28, 30 and a half is going to be a ceiling on this stock for now. So Zoom is, this is a weekly, really in nowhere's land here. Just hoping to stay above the 364 level, which is the 40-week moving average. Let's take a look at the daily, see if there's anything short-term looking there. Yeah, it's holding the 200-day moving average, which is going to be similar to the 40-week, and that's going to be key. You're going to need to get back above the 10-period moving average 417. Tough one to buy. There's really negative momentum here, so I'd be a little careful. Another few days, let the momentum blow off, and then maybe you can get a slightly move up. But there's nothing really clean here to call out. And Walmart's kind of the same story on a short-term basis. Everything very negative. We've already sliced through 200-day. That didn't work. It worked for 3 days, and then it's broken through. If I go out and look at a weekly, it's down at the STX number. STX 132.19, low 133.05. Maybe that'll hold, but I don't think you want to own this. You got negative PPMs across the board. This one's got a lot of work to do. So I'd say come back next week and we'll go from there. So we never got to Bitcoin, did we? Got distracted with GME. So I know everybody, let's see, last Friday we actually got an RTX sell signal on the Bitcoin. It was at RTX 55,722, closed 55,873. 2 week sideways. This is a weekly chart. We're trading down toward the bottom end of the STX 46,211. Probably trade it between around 46 to this. Let's see what R1 is, 58. So that's about where we got to on the highs. What was the high here? 58,346. Yeah, it's probably closer to. It'll probably have to go into a daily chart to get this on Bitcoin. Yeah, this will give you a little better feel. Last evening, I was talking to somebody, and Bitcoin was trading right at this 45 level, 44,966. I made the off-the-cuff comments that Bitcoin's probably a buy here, so it's a little bounce. But we're sandwiched between 21 and 10 here, which is going to be 51 to 4,400, 40,400 to 51. That's going to be your range. And then as we look at the market grid, maybe you can get up to an R1, 52 to 55, R3. But it's definitely seeing it roll over. The upward pressure is dissipating, but the PPM 2 on the 21 period moving average is up substantially. So that will be definite support at 45,950. So, and that's a number that's moving up. So that's moving up. Wow, that's moving up pretty steeply actually at about 700 per day. So it'd be 46.4 as you come in after midnight tonight. That's Eastern time. That's when these charts roll. All right, so here's the deal. I'm gonna do 2 more stocks. Yeah, we got to take a glance at GME for fun. 125 now. Wow, up 179%, 180 now. Unbelievable. That is impressive. And we haven't issued a buy signal on WaveTech yet on GME. That's what I was hoping, that it would stay sideways for about 4 or 5 more days and then pop that thing. But it is what it is. Take it and run. Yeah, let's do something since we're on GME here real quick. I just want to go in and let's do a Fibonacci. I'm just curious what the Fibonacci range is on this thing. Yeah, if we go from high to low on this sell-off, the 0.33 is 184, 0.38, 206. Look at this, right at 50% retracement is the 260 level on GME. And that's got a really good chance of getting hit. 0.618, 314. So real quick, I'm trying to see if I'm around. Wayne James, if you're still around, would you let me know? And let me know if you have some time for a quick Zoom call. Anyway, yeah, I want to do RIOT. Good call. Good call. Thank you for reminding me. Let's do RIOT. Yeah. So RIOT, let me get rid of something here. It's going to make me crazy. Yeah, so RIOT is also trading below its 10-period moving average. That value at $56 is going to be like a magnet to get up there. My guess is we will stay within the grid. The grid is starting to turn up. We'll see if it continues. Most likely will flatten off tomorrow, but this is a dragon head. So typically dragon heads are consolidation phase, and somewhere down the road, whether it's 3 days, 5 days, 10 days, this thing, if I pull it over here, will resolve itself to the upside. There's a couple of charts that we looked at earlier on, I think some of the indexes, not sure what it was, but I'll just draw this in really quick here. Is you get this big surge. This is the dragon head formation, which ends up to be a consolidation, and then typically markets will resume to the upside and at least challenge the old high, and most of the times will make new highs. Also on the momentum set that I talked about earlier, we pretty much got all 3 momentum set at the same time, so they go into this mode here. And you get into these sideways where this orange line is just going to waffle back and forth like this going forward on all of these. And what happens during that time is the trend should resume and go up. So let's break down to some very specific numbers here. The key number on the grid for tomorrow, this is actually tomorrow's numbers that we're looking at here now. Where markets have been closed long enough that we're getting that. But this is market grid for tomorrow. So mark these numbers down, whoever asked for that. 50, R1's going to be 54, probably an R1 S2 level, 54.47 if it stays fairly stable. If it expands out, we could see R2 56. And we should start to move along that thing that I talked about earlier, and that's very interesting. So yeah, so thanks, Jimmy. I got to look at GME is just going crazy. Yeah, 150 now, up 223. I'm telling you, they've caught these guys short again. I know I talked about this in the last live stream, that this thing, there was a squeeze, a secondary squeeze coming. And here we are. Amazing. Okay. And there's a way I can set this so we can actually see this, but we're up, yeah, printed, I think 150. It doesn't record the high lows because I don't have the session open, but I can at least see the prices here. All right. All right, I'm going to do two stocks. I brought up LMT, Lockheed, and that is a good solid trend, at least setting up. There's some Fibonacci projections right now for this thing. If you look on the screen here, around 357, something like that, is 357.60 to 372. PPMs aren't really all that exciting from that viewpoint, but they're set up to continue. Let's go to the weekly graph so we can see what that looks like. Yeah, weekly, very positive. PPMs all turning up. You've got some hurdles to get over, which are going to be that 21 period moving average and ultimately the 40, 355, 368. Once you get above that, then you're going to be looking at 408, 432 on this thing. Yeah, maybe they're trying to, I got a flashback, see GME, 160. Wow. 58 million shares. That's absolutely crazy. Yeah, that's crazy. Yeah. 166, 165 are printing. Anyway, a little distracting, huh? Yeah, so we're back. This is entry GME weekly. We're back above the 10-week moving average. The market grid suggests, let me just look here. So this is not reflecting the current pricing. RXT on the weekly is 144, so we're well above that. Bear with me 1 second. We'll do one last stock. Okay. What's the last stock? Yeah, GME target price. It's actually getting in that range, 160 to 225. I love the moon. Yeah, GME to the moon. And listen, I went on a little rant on this GME thing when they started halting this earlier. But the realities are is that this stock's still very much alive, and there's, easily going to see probably that gap filled. All right, let's do NVIDIA, and we're going to call it quits. So I went over about 45 minutes from where I usually go. I appreciate everybody hanging out. Yeah, so NVIDIA up, this weekly chart. We got a 0.90, 0.1, 0.51, 1.12. Can't talk. Must be about time to quit. Good momentum, underlying trend. This trend is going to continue. There are extreme objectives right now. I'll bring that on screen so you can see it. Yeah, yeah. So Wayne, I see you commenting. Are you available for a quick Zoom? Let me know. I'll send you a link. Anyway, yeah, from NVIDIA, the upward price range on this thing, it's got a huge target. Low target, I'm sorry, high target 1, 900, 1,056, 1,052. These are pretty wild numbers. This is weekly. That's like a maybe a 12 to 18 week, potentially longer type projection. We'll see if that gets played out. The hurdles are going to be here. Is that old high at 583? We actually went through that today, so, and it closed there, so that's a pretty good sign. That's a real good sign. And GameStop is now 174 and going higher. So yeah, 225 is somewhere around that number. It fills the gap. I can't be the, I'm sure, not can't, I'm sure I'm not the only guy that actually saw that. So anyway, still have 390. We're going to sign off, folks. Thank you so much. Sorry about all the sound issues to start, but we figured it out. Got the headsets on. It's really not very comfortable for having these things on for hours, but we'll do it. Yes. Okay, Wayne. Got it. Anyway, yeah. So give me, Wayne, give me about 10 minutes, and then I'll send you a link. Okay. Yeah, 185 now. Yeah, this is pretty crazy actually. 86. All right. Put it back on screen while we're signing off. But yeah, this thing just going crazy. Yep. 61 million shares. The stampede is on. Thanks, Ram. Appreciate it. Thank you, everyone. All right, folks. Have a great day. Don't forget to hit that like button, subscribe, hit the notification bell so you'll know when I do these live streams and everything else that we do on the channel. Really appreciate it. And don't forget to subscribe to the WaveTech tool. You won't regret it. It's very powerful.